All right, good day traders. Today we're going to take a look at copper, Dr. Copper, and we've been flagged for a potential bearish trade in copper, in particular the September copper contract. It's going to be HGU or GHGU, depending on what platform you're trading. And we've got a first notice day on around August 31st, but tradable up through September. So we're not looking to necessarily get married to this trade, looking for potentially just a short-term pop to the downside. So we've got an 86% win trade here, start date on or around Aug 11, end date of on or around 8/31, and we would suspect to be out of this trade by then anyways, as liquidity will start moving into the next tradable contract month. So we've only had one losing year here out of the last 7. Let's take a look at the charts. This is the September contract, the front month, and what we had drawn here, we've been watching copper for several weeks. We have come up here into what appears to be short-term resistance and are also forming a flag at these levels, which we did trade through quite aggressively on Friday. Now today, on Monday the 10th here, we're trading back up, which we typically see is we see this retest here. We do like to see that for extra confirmation, and then have the market reject and then roll back lower. Our first target, really based on just this pattern itself, would be right here at the 2.7 level, and you'll notice that that takes us right back down to this trend line, this longer term trend line going all the way back to March, as well as some support here at this price structure, also kind of coinciding there with the 200. To get a little bit of a better look, those we'll go to the continuous contract, and here is where we can see more price action. The reason we didn't see anything to the left on the September contract is because that was the September contract. It wasn't trading way back then. There was no volume, no liquidity. But if we look at a longer term chart here on the daily, we can see, just going back even here on a weekly chart, that we've got multiple touches going back all the way to early 19, 2017, 2014, some in 2012, 2011, 2010, and so forth. That's plenty of data that we need to see. Here we are trading into this area, and we are indeed showing rejection, or at least pausing points here. So we're looking to take a low risk trade to the downside. We're going to put our initial risk up here above the 3 area, and we're going to target down here around the 275 to 265 area. Now keep in mind that copper can be a leading indicator for the overall health of the economy. So if we start to see copper rolling over, we would expect to see weakness in the equity markets as well. Copper is notorious for being controlled by the commercials, i.e. the general retail spec trader is not too active in the copper market. So you definitely want to be careful when you trade this market, whether you use futures or futures options. Make sure you always use limit orders as well as stops. Those that are trading equities can look at JJC. This one, again, is not going to be very liquid, but you can see the same play here just as we showed you in the copper futures market. We've got the same pattern here. Notice that we also have a 1, 2, 3 top. I'll put our 1, 2, 3 top indicator. We'll load that, and you can see we've got this 1, 2, 3 area right here, and we have our. We'll look to get short on. You can look to get short on breaks or closes below that number 2, with targets down here at 39, which takes us right back here into nice support price structure. So that's what we're looking at and liking this week in the commodity markets. So stay safe out there, and we'll see you on the next update.